This conference will now be recorded.
Hi, I'm Denise Appleby, National IRA expert, and I'm here to give you some tips on transactions that need to get done in the next few days. Just general disclaimer, housekeeping issues. If you have any questions and you need to reach me, my contact information will be on the final slide. The first transaction I want to talk about is setting up a SEP IRA. Yes, clients who are still under a tax filing extension are eligible to set up a SEP IRA for 2018. The deadline for setting up and funding a SEP IRA is tax filing due date of the business plus extension. Now, if you're having conversations with a client about setting up a SEP IRA, in addition to determining suitability, make sure that you ask the client whether or not they have employees or whether he or she have employees. And I say that because one of the most common mistakes that are made by small business owners when they set up retirement plans for their business is they forget to cover their employees. And that's because everyone who's a party to that conversation forget to ask that client, do you have employees? And as a result, there are many small business employer plans right now that are covering just the business owners, and they should be covering eligible employees as well. You also want to ask your client whether or not he or she has ownership in any other business, because if that's the case, those businesses could be considered part of a controlled group of companies or affiliated service group. And if that's the case, then all those companies would need to be covered under the retirement plan. So you just want to make sure you ask those questions so it doesn't create complications for your client later on if it's determined that there are employees that should have been covered that were not covered. The next transaction that I want to talk with you about is recharacterization. Now, we all know that for conversions done after 2017, those cannot be recharacterized. But there's still a recharacterization option for regular contributions. Someone can recharacterize a regular contribution just because they want to. They don't need a reason. But there are some instances when it is necessary to perform a recharacterization. Let's talk about when that is. Now, you know that in order for someone to be eligible to make a contribution to a traditional IRA, there are certain requirements that must be met. For instance, you must have eligible compensation. In addition, you must not be older than age 70 and a half as of the end of the year for which the contribution is done. Or let me rephrase that and say, for the year in which you reach age 70 and a half, you're not eligible to make a regular contribution to a traditional IRA for that year and after. So if you find out that a client made a regular contribution to a traditional IRA for 2018, and that client was at least age 70 and a half on December 31st, 2018, that client is not eligible for that traditional IRA contribution. And so there are two options at that point. The client can either recharacterize the contribution to a Roth IRA or do a return of excess. Now, choosing to recharacterize the contribution to a Roth IRA works only if their modified adjusted gross income does not exceed certain limit. That leads me to Roth IRAs. If you find that your client made a contribution, a regular contribution to a Roth IRA, and their modified adjusted gross income exceeds the applicable limit, then that's an excess contribution. And there are two ways to fix that. Recharacterize that excess contribution to a traditional IRA as long as the person is under the age 70 and a half limit as of the end of the year, or do a return of excess. Now, for return of excess, that has to be done by tax filing due date plus extension. The same thing applies to recharacterization, by the way. Both transactions has to be done by tax filing due date plus extension. And individuals who file their tax return by the due date receives an automatic 6 months extension, which means they have until October 15 to do any recharacterization or perform any return of excess, right? So the first thing you want to do is check eligibility, check to see whether or not they have excess contributions. Excess contributions could occur in a traditional IRA if there's an age issue, for Roth IRA if there's an income issue. And if you want to know what the income limits are for Roth IRA contributions, you can go to my website, retirementdictionary.com. Now, when you're performing a recharacterization or return of excess, the transaction must be accompanied by any net income attributable, NIA, to the transaction. NIA can be earnings or losses. Some custodians will perform calculation of the NIA and some do not provide that service. If you're working with a custodian that does not calculate the NIA, then you can go to the IRS's website and search for Publication 590, which includes step-by-step instructions on how it should be done. So what happens if you have an excess contribution in an IRA and it doesn't get done by October 15? And we're talking about 2018 excess contribution. Then that amount is going to be subject to a 6% excise tax for every year it remains in the IRA. So it could get costly. And therefore, it is practical to make sure that it gets done by the deadline. Contact the IRA custodian to find out what their operational and documentation requirements are so that those can be submitted on time in order to get the transactions taken care of. The final deadline that I want to talk with you about today is trust documentation deadline, which is October 31st. And this applies to where a qualified trust is the beneficiary of a retirement account and the IRA owner or retirement account owner died in 2018. Now, if a trust is qualified, that allows the life expectancy of the oldest beneficiary of the trust to be used for purposes of calculating required minimum distributions during the IRA owner's lifetime or retirement account owner's lifetime and after the account owner's death. One of the requirements that a trust must meet in order to be considered a qualified trust, allowing the life expectancy of the oldest beneficiary to be used, is that the trust documentation must be provided to the IRA custodian or plan trustee by October 31st of the year following the year of death. In my experience, this is the requirement that almost always fails to make the trust qualified. You hire an attorney and everything else is done, and then someone forgets to provide the documentation to the IRA custodian. So if you're dealing with clients who inherited retirement accounts in 2018, find out whether or not the beneficiary of the account is a trust, or maybe the trust is one of more than one primary beneficiaries. And if so, find out whether or not the documentation has already been provided to the custodian. Now, I know we don't have a lot of time, right? And for future months, I'll make sure that I provide my updates much earlier, but at least you have a few days to get these transactions done. Talk to your clients, talk to the financial institutions, and get the paperwork in as soon as possible. Good luck with everything, and look for me next month as I provide more updates. Thank you for taking the time to watch and listen. Have a great day.